Hey, what's up everyone? My name is Lawrence and welcome to my channel, where I teach you how to become a day trader through tips, resources, and best of all, insight on my journey to becoming a profitable day trader. In this video, I'll be talking about the things you'll need in order to get started as a day trader. So here's a quick rundown. You'll need to pick a broker and open a brokerage account. You'll need to understand the PDT rule, make a watch list, find a strategy, practice that strategy by paper trading and back testing, and lastly, record and journal all of your trades for review. Okay, so before you day trade, you're going to have to choose a broker such as TD Ameritrade's Thinkorswim, Fidelity, or TradeStation, just to name a few. I put some of the links in the description below just in case you want to check them out. I personally use Thinkorswim because I think it has one of the best desktop platforms and it's pretty straightforward. I've heard great things about TradeStation as well, but I never tried it out myself to give it a review. But anyway, when you visit a trading platform, you'll have to register for a brokerage account. And a brokerage account is just a financial account that will allow you to buy and sell securities like stocks, bonds, cryptos, stuff like that. And during the registration process, you'll come across the PDT rule. And during that process of registering, the platform is pretty much going to ask you, do you want to do a cash account or a margin account? And if you choose a cash account, you'll only be able to trade with the amount of money you deposit into your account. If you choose a margin account, you'll be able to borrow money and pay it back later, which is riskier. Think of a cash account as a debit card and a margin account like a credit card with no reward points. As a beginner, it's not advised to use a margin account because you can end up in debt. Trade with the money that you have instead of borrowed money. Knowing this is important because the PDT rule applies to only margin accounts. PDT stands for pattern day trader, and this is a regulation that doesn't allow day traders with less than $25,000 in their account to day trade more than 4 times within 5 business days. This makes sense because if you're borrowing money to trade and don't have much cash in your account, that's a pretty big risk for you and the platform you're trading on. So starting out, use a cash account. You can trade as many times as you want as long as you have the money available in your account. You won't have to pay interest and you'll only lose what you deposit. Next, make a watch list. A watch list is a list that you create full of stocks that you like to trade, or maybe just stocks that interest you. I personally think it's good to trade the same stocks because you'll begin to get familiar with those stocks, how they move, how it trades, and trading and charting the same stocks over and over again will give you familiarity and confidence while you're trading. At the moment, I only trade 3 stocks: SPY, which is a S&P 500 ETF, QQQ, which is a tech ETF, and AMD, which is a tech company that makes computer chips. I chose these stocks because they have a high volume and they have a tight spread. Also, I like trading ETFs because it takes a very big catalyst in order to affect the price. And even when it does affect the price, it isn't as abrupt and volatile compared to an individual stock. In case you don't know, a catalyst is an event or maybe a news report that comes out that causes a dramatic price move. Since an ETF holds several stocks at once, it would take a very, very big catalyst in order for it to have some type of effect on it. Overall, it's good to make a watch list of high volume stocks and stick to them so you can know them like the back of your hand, and knowing your stocks will contribute to the performance of your trading because you'll know how they react on a daily basis. Next, you want to find a strategy. Before trading, you have to find a strategy, but before you find a strategy, you have to understand why the stock market moves, which are supply and demand zones from big institutions, hedge funds, or investment banks. I'm just going to refer to them as the NBA All-Stars. The All-Stars are what move the entire market, so their best interest will be our best interest. They are the only ones that win in this game of trading, so it makes sense that we play like them by trading supply and demand zones, paying attention to price action and volume. And for my strategy, I use supply and demand zones along with continuations. So do some research to find a strategy that works for you. Make sure it only includes the leading indicators, price and volume. Lagging indicators such as MACD, moving averages, and others will only do so much for you since they're lagging indicators, meaning the price move will already have to happen in order for these indicators to show you anything. So by the time you get your answer by those indicators, you already missed your opportunity. Price and volume are the only things that inform you of what's going on in real time and even future moves that haven't happened yet, which I'll show you how to identify in my later videos. Now, once you find a strategy, it's time to practice it by paper trading and back testing. Once you're registered with the broker, they'll have something called paper trading, where you can trade the live market using fake money. This is really the perfect practicing tool to help you with your execution and a great opportunity to see how effective your strategy is. It's recommended that you paper trade until you're profitable by the end of each week for about 2 months. The downside is that trading is 90% psychological. You got to have emotional control and discipline, so paper trading won't give you that same in-game intensity. Paper trading is basically basketball practice or running a scrimmage, where live trading while your money is on the line is like playing in the championship. Same strategies, 2 different experiences, and that'll give you 2 different results. Now, let's say you found a strategy and you want to start live trading immediately, like most of us do. Please use a small amount of money to begin with and a stop loss. Also, you can backtest. Backtesting is when you hop on a stock chart, look back in time as far as you like, and see how your strategy would have worked on historical price movements. Practicing your strategies is very important so you can know your strategy like the back of your hand, so you can continue to tweak and improve it as the market changes. It'll also train your eyes to spot your edges, signals, entries, stop losses, and exits. I barely paper traded personally because I desired that in-game experience, which definitely cost me a good amount of money. Your mistakes in practice is okay. Your mistakes in that championship game will definitely hit different. Even though I don't paper trade anymore, I backtest at least an hour every day so I can stay sharp. A good habit to get into no matter what, if you're live trading or paper trading, is to record and journal your trades. Recording and journaling are not really up for debate when it comes to trading. It's one of the most essential things you have to do, especially if you're trying to grow to becoming a profitable trader. Recording your trades will help a lot because you can review them in hindsight to see where you messed up at, and you'll start to see how efficient you are at executing your plan. One thing that you have to know is that you are your weakest part of the plan. The quality of your execution and how you control your emotions and discipline are the most important parts, so you have to learn how to master that. Also, from recording, you'll start to see your weaknesses and strengths. If it's either spotting your setup, your entry, trade management, stop loss placement, and once you spot your weaknesses and strengths, write them down in your journal. Find out ways to improve your weaknesses and complement yourself so you can maintain your strengths. Journaling after every trade goes hand in hand with recording because as you're looking at yourself trade, you can write down what you did good and bad. How did you feel during that trade? Were you disciplined? What are your strengths and weaknesses? And what have you learned from this trade that you can apply to other trades from here on? Recording and journaling is essential if you want to become a profitable day trader. Okay, so here's this video's day trader laws, which are key points and good things to remember when trading. 1. Use the same stocks over and over. Learn them inside and out. 2. Find at least 2 strategies using price and volume. 3. Stick to those strategies through wins and losses. If you aren't using the same strategies consistently, you won't make money consistently. 4. Recording and journaling is essential. 5. The most important thing in trading is self-mastery, discipline, patience, and emotional control. I hope this video helped. If it did, don't forget to hit that like button, subscribe to my channel, and hit the bell to be notified when I drop new videos. Y'all be easy.